Hello and welcome to Fundu Money. Here we will discuss why multi-asset allocation funds help you in volatile markets, the kind of conditions that are existing at the moment, how they are very helpful and useful for investors who might get bothered by turbulence in equity markets, turbulence in debt markets, and how because they invest across asset classes, equity, debt, gold, they can be of great help, especially for investors who are saving money for the long term, for long-term goals, whether it's retirement, children's higher education, etc. Multi-asset allocation funds, when you have it in your mutual fund portfolio, they lend us a sort of stability, shall we say, or a consistency, a predictability in returns which you pine for in volatile markets. So that's what we're going to be discussing now. We have had a discussion in this channel on multi-asset allocation funds. You can check that out. That's a far more detailed discussion. We're going to just be talking here about how multi-asset allocation funds benefit you during volatile markets. But in the first section, which is this section, we're going to just generally give you a quick overview, a quick 101 on multi-asset allocation funds, and it's going to be followed by the second section where we're going to discuss in some detail how multi-asset allocation funds help you in volatile markets when markets are choppy, they're turbulent, how they help you, right? So multi-asset allocation funds, in simple words, is a hybrid kind of fund, mutual fund, where investments are being made in equities. So the money of investors in that fund is getting channelized to equity investments, debt investments, gold, there could be real estate. So on the minimum, there has to be at least 10% investment in each asset in at least three asset class at any given point of time. So this is very important compared to, say, a balanced advantage fund. It's got more asset classes in which investments have been made. So, and it's done by an expert fund manager. And what is the main objective? Risks from any particular asset class, which is equities, there could be risk from debt, there could be risk from gold. So any particular asset class, the risks that are there, they don't affect you too much. The other because if in one particular asset class things are going south, the other investment in other asset classes, what they do is they counterbalance, they offset that and make sure that there's a certain consistency in returns, there's certain stability in returns. Of course, you will continue to get affected by turbulence in any one particular asset class. Typically, multi-asset allocation funds, which we recommend, has to be equity oriented, so that you get the growth, because you typically something like this will be very good if you have if it's largely equity, 65% or more, and the remaining part is actually helping you manage the risk, and it's being obviously be done by an expert fund manager. Now, the reason why multi-asset allocation funds are so important in times like this is because when every market is showing turbulence, whether it's equities, debt, you will not be able to track every market and every development unless you're a professional investor, in which case you wouldn't need to go through this discussion at all. But apart from that, you will of course need somebody who's an expert who will do that. And tracking asset classes, say equities, debt, gold, etc., is very difficult because no one asset class does well on a consistent basis. So if in 2011 gold did well, 12, 13, 14, 2012, 13, 14, its equities did well. So there will be 1 year when equities will do well, and another year it will be debt, then another year gold will do well. Now the idea is, when you're doing a multi-asset allocation fund, you combining so that you don't miss out on something good that's happening in one particular asset class. So as you mentioned, at least 10% of investment 10% investment and in at least 3 asset classes. That's what multi-asset allocation fund has to do. Typically equity, debt, real estate, gold. So risk diversification, as the word goes, which is being done. So you're not totally getting exposed to say a equity market correction, stock market correction. So that's happening. Long term, you're getting opportunities for capital appreciation, because if equities are not doing well, debt is doing well, gold is doing well. So something is there, and there's a mix out there, which is making sure that you never fall back too far behind. So stability and consistency of returns, and you have to look at the whole thing at a long term, from a long term perspective. So this is basically a 101, a quick overview. So we'll now jump into discussing the benefits at this current juncture as far as multi-asset allocation funds are concerned. So we'll cover that in the next section. So we'll take a short break, but before that, before we split for a break, we'll urge you to subscribe to our channel and follow our playlist, numerous playlists, and of course our previous discussion on multi-asset allocation fund. So we'll be back after a short break. Don't go away. Welcome back. Welcome to Fund to Money. We are discussing multi-asset allocation funds, why they are useful, why multi-asset allocation funds are useful in volatile markets, how they help you combat volatility, help you manage volatile markets, volatile situations, especially equity markets. Then of course in the present juncture, even there's turbulence in debt markets as well. So how they help you. So as we mentioned, they try to contain risk from any one particular asset class. So if equity is suddenly correct, you're not totally affected by it. If there's turbulence in debt, you're not totally affected by it, because there's at least 3 asset classes where investments are happening. Now in equities, as we know, there's market turbulence, there is concentration risk, so on and so forth. In debt, there is interest rate risk, there's repayment risk, there's a liquidity risk. All kinds of risks are the gold. There could be growth related risks. There are periods when gold doesn't grow at all, and tax inefficient. So any particular asset class will have limitations and risks. Multi-asset allocation funds is making sure, by investing in having a mix as far as investments across asset classes, these risks are managed well. So it's risk management through diversification. So portfolio risk is being managed through a diversified investment strategy. Now the reason why multi-asset allocation funds work so well in volatile markets is for you, is because you don't have to track the market, you don't have to see the performance. Smart fund managers, experts with track record, they do it, so you don't have to keep following news and read reports and check out experts. It's being done by somebody, and in a very cost efficient manner. The other part is it's all being done automatically. So this whole movement, if somebody wants to your portfolio, the fund is automatically reducing equities when it needs to, increasing debt when it needs to, decreasing debt when it needs to, increasing gold when it needs to. All this portfolio rejigging, portfolio rebalancing is being done by experts, and they're being done on their own, and it's being done according to market conditions. So market opportunities are being taken care of, they're being exploited. You don't have to time the market, you don't have to see when it's the right time to invest, when it's the right time to sell. You don't have to do that. And it's being done in a very tax efficient way. If you try to do that across asset classes, in most of them you'll end up paying capital gains tax. You'll have short-term capital gains tax liabilities, so that you're being spared. Then of course there's the ease of investment that happens when you invest in mutual funds. You can do it through systematic investment plan. Small amounts you can invest, or whatever regular amounts you can invest over a period of time, every month, say, for instance. Then also you can invest lump sum, systematic transfer plan, where a certain amount is being invested in a multi-asset allocation fund. And you can also use a systematic withdrawal plan, where the money, you need to withdraw a certain amount of money, a regular amount, even as the remaining money keeps growing. So all these benefits are there, but largely the benefit that's worth talking about is this management. This first, the risk is getting managed with investments across the asset classes. It's being done by an expert. The rejigging, the port mix between debt, equity, gold and others is being done in an efficient way, tax efficient way. It's being done on its own, and it's being done by an expert. So all this actually helps you manage volatility in such situation. That's why multi-asset allocation funds should be a good candidate for you to continue investments, take advantage of equities. Typically it has to be equity oriented multi-asset allocation fund, and therefore if you have that, you can make sure that you keep getting returns for your long-term goals, whether it's retirement or children's higher education. So we hope you found this useful. We'll once again urge you to go through our previous presentation on multi-asset allocation funds, and of course check out our various playlists, whether it's hybrid funds or otherwise. And if you've liked this presentation, hit the like button and share it with others. Subscribe to our channel. Till the next presentation, take very good care of yourself, and goodbye.